Yeah, I mean, look, they did set up a high bar for the cloud segment. So the fact that we saw a miss there, and the other big miss seems to be around the YouTube subscription line, even though it's lumped into that other segment. But even though they beat on YouTube ads, the subscription line seems to have decelerated. But overall, I mean, look, the search was very resilient. You can see that number was strong, which is why when you look at the overall operating income, I mean, it was in line. So given how much weight we put on the cloud and the YouTube segments, the fact that those two disappointed is why you're seeing that knee-jerk reaction.
Cloud, YouTube. What about CapEx? The estimate was for $58 billion roughly. Alphabet comes out in this press release and says, seeing CapEx this year about $75 billion. Is the company being punished for that?
I don't think so, because we know Meta just raised their and look, Meta raised their CapEx guide by 50% for 2025. So to me, this number is in line with what Meta is doing. In fact, a lot of people expected that Google will raise. And so I would be surprised if the stock is down because they raised the CapEx guide.
Is this, I know you don't give price targets, but seeing a close to 7% decline, 6.5% right now, given that the company barely missed on fourth quarter revenue, it seems like a big reaction for not that big of a miss.
Look, the way to look at Alphabet right now is everyone feels the YouTube and the cloud businesses are the growth drivers. So they are $100 billion run rate, almost 1/3 of the overall revenue. But that's supposed to be the 25 to 30% grower. The search business is supposed to decelerate just because they have more competition. And look, I think search is a much higher revenue base. So in this case, the fact that search continues to be resilient and the growth businesses are decelerating, that is why you're seeing this sort of reaction. But overall, I would say, in the case of a company like Alphabet, everything is so interconnected. Like they have 6 apps with over 2 billion monthly active users. Now, YouTube is one of those, but then they also have Maps and, the core search business. And that's where it's powered by a common digital ads platform. So it's not worthwhile to look at, individual businesses and judge them on their performance in a quarter. Overall, business continues to go very robustly, and you can have a quarter where cloud has a slight miss and YouTube has a slight miss, but I think overall, when you look at Alphabet's growth, that's still very strong.
Mandeep, what do you want to know about that cloud miss? Again, slight miss, and it could be just an off quarter. It happens to companies, but does it say something about the AI spend in terms of companies?
Yes. Look, they are raising their CapEx. We know they will be spending $75 billion.
Right.
How does that translate into cloud growth? That's the number one question, because if it's decelerating and they're increasing their CapEx, that's not a good sign. But my feeling is, this is more about compute capacity being available to be deployed to the customers. Everyone was compute constrained. We know that in 2024. So is this CapEx really to alleviate that compute constraints? My guess is yes.
Well, it's so interesting that you say that. I was having a conversation with people about kind of power, nuclear, and so on and so forth, and the demand by AI, and how we've seen from so many of these tech companies that the power isn't necessarily there to power everything that needs to be done in terms of the AI world and all the computing. So does that continue to be a drag on some of these numbers, and so we have to kind of brush all these results with that?
Well, the one other factor with Alphabet specifically is
the build isn't there.
Everyone expects Alphabet to be more kind of compute efficient because they have their own TPUs, like equivalent of NVIDIA GPUs. So the fact that they're raising their CapEx despite having their own chips is also somewhat of a negative sign, although I won't put too much into it. I'd wait for the call.